The continued government shutdown, looming debt ceiling, and the Fed coming up on For Pete's Sake. And with me is Peter Hug. Peter, thank you for joining me today.
You're welcome, Alex.
So the government is still shut down, obviously. Article from Bloomberg, $1.6 billion. It has cost the government so far $160 million a day. What can you say about the American government right now and where they're heading?
The government shutdown, I think, is psychologically in the market, but it's so minor relative to the bigger picture of the debt ceiling negotiations that are coming to a deadline within the next 10 days. I mean, I feel I have some empathy for people that have set their wedding plans and wanted to go to the Washington Monument and had to cancel them. But in the overall scheme of things, the government shutdown and it sounds like a lot of money, which it is. But in the overall scheme of things, with budget deficits in the trillions, it's a minor point. The point that everybody is focused on is the debt ceiling negotiations and the intransient position of both the president and the Republicans. And if they blow this one, as I mentioned in my commentary this morning, I can't even guess at what this does to the price of the metals. Obviously, it's going to be higher, but I can't even quantify what's going to happen if they blow this one.
As you mentioned, with the debt ceiling looming, no one knows what's going to happen yet. But in terms of what this means for metals, is this making metals more of a safe haven now more than ever?
Yeah, again, I approach this market as a trader, and debt ceiling aside, which again is still up in the air, which is creating some obviously support for the markets and some upward bias drift as it gets closer to the deadline. But the fundamentals of this market look bearish to me. I mean, if this debt ceiling were to get resolved today, if they came to some kind of compromise, I think the metals look heavy, and I'm bearish this market. From a conservative perspective, from a point of view of holding a percentage of your assets in metals as a balanced portfolio approach, it cannot be any more blatant than what's going on now that to justify holding precious metals, specifically gold, in your portfolio as a protection against the insanity that we're seeing happening in Washington.
So we move on to the Fed, who will be speaking this week. You have Bernanke, who's dealing with this shutdown government for the first time since he's been there. What should we be looking for from the Fed?
I think Bernanke's got the perfect out now. I think the market is looking, or was looking, with some economic strength over the past couple of months, that the Fed might taper. Again, I've not been in that camp all year. I still think it's a 2014 event. May even be a situation, if this debt ceiling negotiation gets out of hand, where the Fed might even have to increase bond buying to create more stimulus for the economy. But I think what Bernanke is going to be saying is, look, guys, what's going on now in Washington and with the government shutdown, it's conceivable that we're going to continue bond buying for the foreseeable future, because we do believe that not only the government shutdown, but some of the issues with the debt ceiling, if they're not resolved soon, is definitely going to have a slowing effect on the economy, which obviously will hurt employment and give the Fed more ammunition to continue their bond buying for the foreseeable future. And this could extend much, much further beyond where I thought they would start tapering in the spring of next year. This could extend till the summer or even fall of next year before tapering comes into play.
Now, going back to the debt ceiling discussion, in 2011, when the United States government pushed it to the 11th hour and eventually did reach an agreement, they were promptly downgraded a few days later by the S&P. So if this happens again, if they do put it to the limit, or even if they reach an agreement before the debt ceiling limit, do you see them being downgraded again?
No, I don't think so this time. I think if they come to terms to extend the debt ceiling, I don't think we'll see a downgrade. But I do think that the ratings agencies are going to be looking at once we get through this, and I'm assuming we will get through it. As I mentioned this morning, it looks like everybody's caught like a deer in the headlights, but I think we'll get through this. At least I'm assuming we will. And if we do, I think the debt agencies will then start to look at, okay, can you guys get together and work on some kind of a master plan or the grand vision where we can come to terms and agree to a balanced budget going forward. That'll be the next major hurdle for the U.S. government. And I don't think that'll happen until the elections of 2014 are behind them. But once that then takes front stage, then the debt issuers will look at the financial state of the U.S. economy going forward and then make a decision based on that. But my assumption is this debt ceiling will get extended and will not have an impact on the credit rating of the United States. If they blow it, I can't quantify what the results are going to be, but it's going to be really, really negative.
All right, Peter, and to conclude, how about sharing some gold and silver ranges with us?
Yeah, I'm going to tell you gold will trade between $1,000 and $2,000 an ounce over the next 2 weeks. No, I'm sorry, I'm just kidding, but this is a totally emotional market, totally emotional. And if they come to terms on the debt ceiling, I think the fundamentals of the metals markets look negative, and I would expect to see gold in the 1270, 1280 range pretty quickly, and silver in the low 20s with that type of range on gold. If this extends out until October 17th with no resolution and continuing bickering by both the Republicans and the president right up until the 11th hour and 59th minute, I think the drift will be higher, probably looking at a 1370 upside target without a debt default, and silver then up in the high 24s. Should there be a debt default, which again, I think is highly unlikely, but if that happens, I can't quantify the upside, but I would suspect $200-300 in gold is certainly in the cards. Silver, $4 or $5, but I am not in that camp.
Well, that was good stuff, Peter. Thanks for joining me today.
Yeah, good luck with everything.
And thank you for watching this edition of For Pete's Sake. If you have any comments or questions, please don't hesitate to send them to newsfeedback@kitco.com. Also, be sure to check out Peter. He'll be speaking in San Francisco at the Metals and Minerals Conference. That's November 25th and 26th. Thanks for watching.